Hey, what's going on, everybody? Doing a live stream here. Set it up myself, and obviously I fucked it up. It doesn't have the right intro or the background. I'm still confused about doing this. Anyway, I guess I should put the. I thought I had it. I mean, I chose the peddling fiction channel, so I don't know why it doesn't have any of those settings. But whatever. We're live. It's about 20 minutes before the market close, and I figured I would go live. Justin's out today. He's one of his kids' birthdays, so I guess they were doing a bunch of birthday hoopla stuff, and we're having a crazy day in the markets. Well, as far as I'm concerned, I mean, silver's okay. So I titled the show $100 silver or $5,000 gold. Gold hasn't quite made it to 5,000 yet. We're at 4,982. Maybe we can watch it live, clip 5,000 before the close. I don't know if it'll get there. Silver just ripped through $100. We're at 102.25 now. Like, it is just going completely fucking parabolic. It's really gonna bug me that I don't have the right fucking logo on here. God damn it. Don't have the logo. Don't have the intro. Let's see if what if I do this? No, that doesn't work. All right. So my first actual live stream is kind of a fucking fail. Apparently you need a live or you need a premium account to go live to YouTube. So it wouldn't let or to Twitter. So I'm not paying for that. I don't really care. So I couldn't do the first one I set up, couldn't do that. The first thing I set up was a recording, apparently, even though it said, do you want to set up a live thing? And I was like, yeah. So I had that set. Then I couldn't go live. I could just record. And then I set up a live thing for Twitter and got an error because you have to have a premium account in order to do that. I don't really see the point of having a premium account. Maybe there's some other benefits, like you have longer posts or something. I don't really care. And so then I had to remove that one and set up the YouTube thing. So hopefully this works. I don't know. Let's see how this goes. But put the comments up there. So yeah, I just thought we'd watch the markets live. We can go through some charts here, like I do on the Substack. And we can talk about some of the shit that's going on in the fucking news. I know Trump was just at Davos. He had a fucking crazy speech. He said some pretty interesting quiet parts out loud that I don't think you're supposed to say. And then of course we got just more ICE craziness. It's just ridiculous. Some shithole Chicago stuff. Of course, I don't have any of that. I don't know how to do any of that stuff. This is how fucking useless I am without Justin. I'm still trying to figure out why this doesn't, when you select your channel, why it doesn't give you the channel settings. This is gonna, like, my OCD is just gonna fucking go off the charts here. I don't understand. Dun, 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 bum, 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 bum. So anyway, let me get my fucking ugly mug off here, and I'll share some. We'll look at the. We'll watch the markets as they go into the close here. I want to share a screen, and I want to share this one. All right. Is that working? I can't even see it. There we go. Yeah, shit. They put me to the side. No, I'll be on top, maybe. Be on top. Let's do this one. Can we do that? Is that better? Can I make that any bigger? Probably should have figured this out before we went fucking live. What if I just do that? There we go. All right. That's pretty decent. So if you remember when we first started watching gold, it was in this area here when I first started doing the commentaries and I was outlining these zones. If we just take a step back here. So this was the area we were watching. And this zone held pretty nicely. Let's see. Is that, yeah. So we were watching it in here, and it was chopping around for a while. But you notice that most of the bodies stayed above the midpoint of that zone there. And they never really got into the lower quadrant. If I draw the quads on there, we go like this. There's probably a lot of respect for the 75. Yeah. I mean, I'll try to zoom in so you can see that better if you're just watching the video. But look at the lower quadrant. Look at the respect for that. Look at these bodies. They stop right on it. Yeah, the wicks are going to wick. That's what they do. The wicks do a lot of damage. All right. But the bodies tell the story. So yeah, you're going to get some wicks down in here, and that's going to fuck with you if you're actually trying to trade this. So you have to account for that. But if you're looking at the overall picture and you zoom out and you see the bodies net, look at how much respect, and then you do get respect of the wicks once the bodies respect it. This one ripped through, closed in the gap completely, and then you got a nice rally from there. This wick again, just absolute respect of that bottom quadrant there. So that was all very bullish sign. And I remember there were a lot of people saying that, oh yeah, gold's going to fucking crash. Gold's going to crash. This is just a blow off top. And it respected that zone and then ripped higher. So we kind of went through that. I don't need to beat that. But here was our next area of focus. And you see something similar, right? You see another inefficiency in price. All right. And you see the bodies respect it. Let's put our quadrants on there. All right. And we can zoom in. I didn't draw it perfectly. There we go. How's our zone doing? It's close enough. All right. So again, most of the bodies are respecting that midpoint. We got one closing below it here. But again, closed above the quadrant, the lower quadrant. And yet wicks through it a little bit. But when you start to see respect like that, you can anticipate, and especially remember, look at left behind these relative equal highs here and here. Again, high probability for a raid. And we got a nice move up, and it left these relative equal highs behind here way back in October. And then it put in another one right here. This is when I knew we were really going to rip. When you see something like this, this is a breakaway gap here, right up here, right in that zone there. All right. You see that you've got relative equal highs here. You could even consider these relative equal, but we ended up taking those out. Right. And we put in a relative equal high here, here, here. And you got this gap below that the market couldn't even dip down into. It was so strong that it didn't even make it in here to address this inefficiency. And that's kind of when I was like, all right, here, we're going to rip through this 43.81 level. And rip through we did. And then we got a big retracement. Immediately was beat down. This was December 29th. Turned out to be a pretty good buying opportunity. Still couldn't get down into that zone there. But then we inverted it immediately, and we created, so here we have two of these zones, right? We have a bearish one, which is this inefficiency in price right here from the low of this green candle on December 26th to the high of this green candle on December 30th. It was all sell side. All right. So we had that, but then on the way back up, when we rallied, again, notice that these are not aggressive moves down after this initial candle, right? You still had an up close on this one. This is kind of an indecisive candle here. This is a bearish candle, but again, it's not like violent moves down. All right. And then we finally make it into the zone. This one closes above the midpoint on a strong move, creates an inefficiency here. So we have a bullish inefficiency from the low of this candle on January 6th to the high of this candle on January 2nd. So that's shaded green there. This we're anticipating to be inverted, and we closed in the upper half, created that zone, dipped into it once, dipped into it twice. Let's put let's draw our quadrants on there just so you could see how the price action goes. I didn't actually draw that zone exactly right, but there we go. That's more like it. And again, basically stops on a dime at that bottom quadrant, and you get a nice reaction off of there. All of these bodies are respecting the upper half of this bearish zone. So we're now anticipating that to be inverted, which is why it's colored in orange there. All right. And then look at the move we get from there. Okay. Boom. Take out those relative equal highs, create a new zone of inefficiency here. And these are just like step ladders. They're just going to take it. They're going to use each one of these to take it higher. All right. This one only dipped into it once. Again, to the midpoint, wicked through it a little bit. That, again, that is permissible. And then look at the move from there. This was last Friday. Since last Friday, it's just been an absolute tear. Rip through it. We're now at 49.82, flirting with 5,000. I don't think we're going to get there today. It would take a pretty big move in the next. Well, so gold does trade for another hour. It's not going to close in 10 minutes like the rest of the market. So maybe we get there before the close. But yeah, and today's Friday. So my guess is it's going to save that for Monday. If I had to guess right now. Let's take a look at see how the day traded though. So we opened up at 9:30 here, and yeah, it's just been a very, very bullish day, but not a monster day. We're up like $42, which is not even 1% anymore for gold. So still a strong day. Believe it or not, if you thought it was impossible to own a gold and silver mining companies, some of these are, at all-time highs. Other ones are not at all-time highs. This one, Groy, is down 3% on the day. I don't even know, is there some news? Cut the hold from buy from Canaccord Genuity. Okay, that was yesterday. But how any of these could be down? I mean, some of these probably had monster days yesterday. Yeah, see, it's gapped up yesterday. So like, yeah, maybe you get a little bit of a pullback today, but yeah, most of these are up big time. The fact that this one's down 3% on a day where gold is about to hit 5,000 and silver blows through 100 is just mind-boggling to me. Absolutely mind-boggling. Of course, I own that one. Of course, I own one of the few gold miners that is not crushing it as gold gets to 5,000. I mean, I'm up pretty big on the position. I had it like, I think it's like $5. Was that 5 now? I think I bought it at 2 something. So yeah, but that's still ridiculous that it's down 3%. I don't know what's going on with that. But it might be time to trim that position because that's just so fun. If you're not making money as a gold miner in this environment, like you should be printing fucking 5, 6, 7% days. Some of these, like this one, I don't know this one, Avino Silver, it's up 20% today. A lot of these stocks are moving real fast. I've been, I do run the options wheel on that for those of you that trade options. And it's like, I just can't get filled. Like I'm just selling puts and they're just running away from them left and right. So the market's very strong right now. How's the rest of the market doing? NASDAQ, Dow's down 0.5% on the day. S&P flat, NASDAQ basically flat. So yeah, it's just kind of a lazy Friday for the rest of the markets, unless you're fucking silver. Silver, look at silver's up 6.5% today. And it ripped through. I was thinking we might get, a nice rejection once it clipped 100, just because I feel like psychologically that's a big level for a lot of people. We got there so fucking fast. Let me get off the 5-minute. Let's look at the daily chart. Fucking silver. I mean, look at this. This is insane. This is just back in November. In November, we were at $47. It took us, the last time we were at 50 was, and I don't even think we got to 50, back in the 80s? Oh, maybe we did. No, we didn't. Yeah. That was 2011. So let's go back to the 80s. Hang on. This chart's you're not going to be able to read that. But I don't think we even got to 50. I think it topped out at like 49 something. You can't even see it on this chart because it's so fucking long ago. But we put a double top in just under 50. And in 2011 and in 1980. And we blew through that in November. Did we? Yeah, that's 2021. All right, here we go. Now we're back to reality. We blew through that in October, rather, and then we had a massive pullback. We dropped from 54 to 45 basically in a couple of days. 1, 2, 3, 4, and in a week or so. That's a big pullback for silver. 54 to 45, $9. Like that's a massive move. And I remember people were saying, oh yeah, this is exactly what happened in the 80s. Yeah, we got up there and then it pulled back and it dicked around. I mean, think about how long it took from 1980 just to 2011 to get back to that level. Okay. 31 years. And then from 2011, it took another 15 years to get back to that level. And now we just did more. Now we just did $50 in a couple of months. I don't think this is a blow off top, especially in silver. Gold is more of like a monetary metal. Silver to me is not a monetary metal. I know when we were on the dual standard, you could, $1 was an ounce of gold. So does that put things into perspective for you? Right. The minimum wage in the 1950s, I think the minimum wage as we know it today was $1, was an ounce and a quarter of silver. An ounce and a quarter of silver. That is, that's $125 an hour now. That'd be $125 an hour. So $1 is $1 from back then, from pre-1971, is $100 now. Like that's what the fucking government has done to your money. That's why everybody's so fucking unhappy. And that's the true price of this empire. We fight all these stupid fucking wars. We spend all of this money on these ridiculous programs. All of these leeches in Washington that are pretending to care about you. Oh, they're just here for the children or the poor and the sin and the old and the sick. And they're just here out of the kindness of their heart. They're all just a bunch of fucking saints, wonderful public servants. Bullshit. This is what they've fucking done. They have stolen every fucking ounce of purchasing power you have. Because we allowed them to do it. And how do we allow them to? They amended the fucking Constitution. They changed what was probably as close as you could get to a document, a perfect document for regulating government. In theory. Obviously, it failed fucking miserably because look at where we are today. But they changed just a couple of things here and there. They get their fucking foot in the door, that camel's nose under the tent. And it stinks up the whole fucking tent. This is one of the reasons why silver is going parabolic like this. There's a lot of fundamentals to like behind silver, and I've mentioned them before on shows. I haven't gone into a lot of detail on it. Gold, I think, is telling you. One of the reasons why I know this is not a blow off, well, I don't think this is a blow off top, and that I think this is more like the new normal, is that the institutions, the banks, the central banks, the ones that decide on monetary policy, they were the ones buying gold in this run up to 5,000. All right. They were the ones responsible for this move here. and then this move here. And now maybe there's some, some small, some institutional money and some individual investors piling in this move here. Maybe. I don't even know. I don't know that to be true, but it wouldn't surprise me. People, a lot of dumb money likes to buy on these breakouts here, and this is absolutely a breakout. I don't think it's a blow off top. I don't see a reason fundamentally or in the charts here. This was a nice healthy pullback right here. All right. And we chopped around for a little bit. We built up some liquidity to take it higher. We had another nice little pullback. These pullbacks are healthy in a bull market. All right. And it's not going to be that obvious. These when you see people on Twitter and everything that are so convinced that they've, that's the top, it's never that obvious. In hindsight, maybe people can spot it, but I don't think this is a blow off top. I think this is the new normal. There will be like you will have days like this where you have a big down day. Well, this is 45, 35 down, down fucking $200 to 43.25. Okay. There might be some big violent slant when they slam it down like that, but that is really just so that these bigger institutions can can position themselves for the next leg up. They're buying these fucking dips. I mean, look how long these dips last versus how long the up moves are. All right. And look at what we're seeing. We're seeing the down close candle support price, right? We barely dug into these down close candles here. This one supported it. All right. This one, look, we touched it here. Look, if I draw a line here, trend line. Here's the high of the day. Here's the opening price. We didn't even get down to that, but we tapped it. We tapped it right there, and then we immediately went higher. That's what you want to see in a bull market. Is that do I think it's just going to keep going up like this? Every day is going to be a fucking monster green day? No. Obviously, you're going to get some pullbacks, but I mean, this big beefy candle here, this is going to provide a lot of support. So from 45.33 down to 40, like good luck cutting through that. Could it revisit it? Yeah, I would expect that to provide support. And that would be a pretty big move. I mean, that would be, it's a 500 point drop from here. But I think any down moves will be short lived, and they are building liquidity to take it to the next leg higher. And it looks like we're just going to kind of chop around here. I don't think we're going to get much higher. Asia on Sunday, I would expect a gap up. I mean, maybe Tuesday will be the next down day in precious metals. I have no idea. A little turnaround Tuesday action, but I'm expecting a monster Sunday night in Asia, particularly for silver. I mean, I'm still kind of surprised that silver blew through 100 the way it did. I mean, there's just no doubt about it. 102.65 now. It's up $6.50 on the day. I mean, these are insane moves. If you've been following silver for any amount of time, when it was up like 40 cents in a day, it's like, oh shit, silver is up 40, 50 cents today. That's a huge move. And now it's doing $6, $7 on a big move. This is the market trying to come to terms with the fact that the U.S., these huge banks in the U.S. have been beating silver down, manipulating the price using paper contracts. And that's meeting the reality of physical silver being needed in the world more and more. Everything that everyone, all this new technology that the world is banking on for the future, all the AI stuff, all the electric vehicle stuff, all the chips, the data centers, solar panels, all this stuff uses silver. It's not just a paper contract anymore. And all of this stuff is manufactured in fucking China, over in Asia somewhere. The chips are in Taiwan is one of our big semiconductor. Like, they're buying physical fucking silver. So the paper is irrelevant, and they need to come to terms with the fact that they've been suppressing the price of silver for this long, and the banks have finally gotten caught with their fucking pants down. These huge moves like this. The banks have to cover their shorts. They've been shorting since $40, like since it was down here. They're crying uncle, and they have to cover those positions. These are billions and billions of dollars, billions of ounces of fucking silver. Forget billions of dollars, billions of ounces. They've shorted more than fucking 7 years worth of production. It would literally take, if like one of these banks, take like Morgan Stanley, JP Morgan, you can take your pick because they've all done it. One of these banks has shorted more silver contracts than it would take, then we could produce the silver, the physical silver, in 7 years. And they've all done it. They've all fucking done it. And they all got rocked in here, or in the 70s, right about here. 74 was like a key level for them. This is when they started to cover. This is when they had to start to cover. They beat it down and they cover, and they beat it down, they cover, they beat it down, they cover. And now they've just completely lost the plot. You're going to see these big days up now, because they have to buy back a shit ton of fucking silver, and that forces the price up, and it feeds on itself. Like I think I mentioned this on one of the prior episodes in the last couple of weeks. The GameStop short, which I bet a lot of people remember from like 2021. All of these hedge funds were short like 140% of the float of GameStop. So I mean, the float is like how many shares there are outstanding, basically. So they were short 140% of the share. Like, it was just impossible to cover these shorts. There weren't enough shares out there. The short positions that these banks have had is 5 times bigger than the short positions on GameStop. Okay. And that move in silver in the 80s was from like $1 an ounce to 50. Okay. This move was basically from what, 30? We were hanging, I mean, look how long we chopped around 30, between 25 and 30 for fucking years. If you can go back, we got to 30 in 2020, and we finally really broke through it in like 2025. I mean, we had a false breakout here in 2024, and then it chopped around a little bit more. October 2024, another little false breakout, and then we finally fucking did it in early 2025. It's just 5 years of chopping around between 18 and 30, spending most of it, above 25, but below 30. So this move, while it does seem fucking parabolic, is only 3x where we were. It's not 50x. That's what it was in the 80s. We went from $1 to $50. Okay. This has not been a 50x move. This move could just be getting started. And the fundamentals support it. The monetary fundamentals, the market fundamentals for, the economic fundamentals for the use of silver. Gold, like I said, if you think Donald Trump is going to stop spending money anytime soon, you're delusional. You're absolutely delusional. He's got the Fed cutting rates. Now, I don't know how many rate cuts they're actually going to be able to get through. But they're going to try. They're certainly going to try. And if you can't get, the right person in there to cut rates, then they'll put somebody else in there. And they've already restarted quantitative easing. They said they were going to stop, and they started again fucking 2 weeks later. They are now purchasing a shit ton of treasuries and a shit ton of mortgage-backed securities. That's QE. That's exactly what QE was. Now they're calling it that. They're coming up with some other bullshit excuse. But that's what it is. At the end of the day, they're printing money. So that's why they were buying fucking gold leading up to that. So all these central banks were buying fucking gold. And silver, the fundamental, like I said, I think they're different because silver is actually used a lot more than gold. And it's going to be needed for all of this AI shit. And that Samsung battery might be one of the major catalysts for this. When they came out with that solid state battery that uses a kilo of silver per battery, that's for the Americans out there, which is most of our audience, a kilo is 2.2 pounds of silver per battery. And this battery, I think, if I remember correctly, has about a 600-mile range and a 9-minute charging time. So that's a fucking game changer for those electric vehicles. Absolute game changer. And you think Samsung and all of these electric vehicle manufacturers give a shit if they're buying silver at 100 or 150 or 200 or 300? No, they need the silver. They can't make the battery without the silver. You can't have the car without the battery. And whether or not you're adding, a couple $1,000s to the price of a $60,000 car, it's not going to matter to them. It's not going to matter. They have to have it. So they're buying silver at any price if they can find it. We're already dipping into our reserves of silver because we didn't need this much silver in the past. But now we're getting to a point where we need a lot more of it, and we don't have it. And it takes, thanks to a large part to government regulations, it takes like 8 to 10 years to get a new mine off the ground, to actually get silver out of it. From the time, first of all, you have to find the fucking thing. You have to find the silver. And then you have to jump through all the regulatory hoops, get all the permits and all that bullshit. And then you have to mine it. That whole process, it's like 8 years, like best case scenario, before you're actually, from when you find the mine to when you pull some silver out of it. And a lot of silver, like I was saying on one of the previous episodes, is a byproduct of all these other, of copper and gold mining and things like that. So, they can try to ramp up production, but you're not going to see the effects of that for another 8 to 10 years. So yeah, there's not going to be enough silver to go around pretty soon. Now, one of the cures for that is, the cure for high prices is high prices. So a lot of people maybe that are holding physical silver, they could be selling into this, and the higher up prices go, the more likely they are to unload some of their silver onto the market. But even then, I don't know. I don't think $100 silver is going to be a fluke. I was expecting, or 102. Dude, we're almost at 103 now. Jesus Christ. And it's going to close on the high of the day, it looks like. I mean, we got another 45 minutes of trading here. But I mean, this is one of those markets that, like, it's to the races. Like this move in here, this was all just loading up. I was chopping back and forth. This is them just loading up for the next fucking move higher. Again in here, boom. And then you'll get some more consolidation. And then you'll get another leg higher. I don't know what's going to stop this from going higher. I really don't. And yes, obviously you guys know I've been a big proponent of precious metals forever. But if somebody wants to make the case as to why this is a blow off top, other than the fact that, oh, the chart's gone up a lot really quickly. Okay. Yeah, short term, maybe this is just a short term jump, but over the long term, explain to me why this price is going to go and stay below 100 now. Because over the long term, we're going to need more silver. over the long term, we're going to print more money. I mean, these charts are not screaming blow off top to me. They're screaming currency crisis. We are in deep shit in the U.S. and Donald Trump doesn't seem to fucking understand it. He wants to borrow and spend more. All these politicians, they just want to juice the numbers for their term. Like he just wants to be able to leave office and say, like, I made the greatest economy. I did this, I did that. And it's just, it really fucks us over the long term because they have a very short time horizon. The rest of us have to fucking live under the shit that they do, under the destroyed currency, where $1 used to buy $100 worth of shit. Like that is fucking crazy. That is absolutely fucking crazy. And not that long ago, like 100 years, like 100 years ago, that the creation of the Federal Reserve was the demise of this fucking country. It opened the door for all the fucking shit that the government does that they shouldn't be doing. And it just, any controls that were in the Constitution, they got around. All of them. Because it's a private institution and all that. Yeah. Okay. So that's kind of where we are today. If somebody has a really bearish case for gold and silver, I'd like to hear it. But I don't think I'll be convinced by it. I really don't. I don't see a lot of reasons for over the long term any of these things to go lower. I mean, we should be headed toward some sort of gold-backed currency. That would be the proper thing to do. But, when was the last time the government did the right thing? Exactly. So, yeah, let's see how we close the week out. So the Dow here, we're in a bit of a sideways consolidation after we took out those relative equal highs from December 12th and December 26th. Ripped through those. We got ourselves a little zone of inefficiency here. A bullish one. All right. So that's kind of where we are right now. Oh, let me draw it better. I could just use the control function and actually link it to those, but all right. So that's where we are on the Dow. Let me put our quadrants in there. All right. So showing some good respect for that lower quadrant. All right. Left some open space down here. Got a nice reaction off of it. Them, it's like really hard to miss. Like here was a complete gap in price. Right? Complete gap, and then it filled it immediately, right? Filled it immediately. Look, left the lower quadrant open. Wicked through it. Got a nice reaction off the low. Again, I didn't draw it perfectly, but you get the idea. You get the idea there. Did close below it, but a nice reaction off of it. Anytime you see these gaps in price, they will be revisited. Right? This gap was immediately filled in. Clear up some of this stuff. Don't want a lot of I do this so that you guys, it helps visualize it, but look at this gap. Look at this one. Immediately filled in. Like immediately. Created it, and then over the next 2 days, filled it in almost perfectly, right? And it left this gap here, and then it filled that in. Okay. So this still looks pretty bullish to me. The one thing I've learned about trading all-time highs is you never want to try to call a top. But look at this. Look at how smooth this is right here. Look at how nice and smooth that is. And the textbooks will tell you that is resistance. Can't even draw a flat line in there. All right, this is our new resistance level right there. Okay, look how smooth that is. And we got relative equal 1, 2, 3, 4, 5 relative equal highs right there. And we've been kind of consolidating underneath them for a couple weeks. It's just, in my mind, this is them building liquidity to rip through that. Maybe next week. But yeah, this is, I think we're just going to start to see, especially with all the inflation that's been going on, you're going to start to see a lot of just the markets grinding higher in nominal dollar terms. But if you price it in gold at 5,000, it's like, is the market really going up that much? Probably not. So yeah, we'll watch this. I wouldn't want to see it spend a lot more time down in this green zone here for the Dow. And I don't really expect it to. I expect it next week probably to attack these highs here. And then start heading higher. You know, Dow 50,000, great. But Dow 50,000 with $5,000 gold, that ain't so great, is it? I expect the dollar to just be getting killed. Jesus, look at the dollar today. Just getting fucking rocked. I haven't looked at this chart in a while. Let's look at a weekly chart. Let's zoom out for a minute. Yeah, I mean, there's some nice, these look pretty juicy to me here, down below fucking 90. That would be an absolute fucking, that would be a big crash. I mean, the way the dollar index moves, I mean, you know, from 97 to 90, that might not seem like a lot, but it is. But yeah, those look pretty attractive to me. We had the relative equal highs here, these guys. We took those out, ripped through it, and then immediately came back below and took these out here. And then we got these resting down below here. So over the next, I don't know. I mean, this is a weekly chart. So this is a longer term. This is not going to happen overnight, but maybe for the archives of peddling fiction. 88,307. Look for it to attack that over the next couple of years, maybe. That's on a weekly chart, remember. So on the daily, again, I mean, it just doesn't look good. The chart just does not look very bullish to me. And then when you combine that with the fundamentals, what we're doing to the dollar, I don't like it. I don't like it at all. NASDAQ, again, NASDAQ looks like it's getting poised for new all-time highs here. You got some highs. This one's, you know, relative equal highs. This one higher than that one. And it's sort of like you can see it just sort of inching higher. We're making the lows that we're making are higher each time. So this low is higher than that low. This low is higher than that low. This one dipped below that. Yep. But we immediately reversed. Look at the reaction we got after we took out this short-term low here. Immediately came back up. It almost looks like a coiled spring, you know. So you got, and they do call these, well, this is like a wedge pattern here. Yeah. I don't trade a lot of these things, but you can kind of see them. So it's going to bounce in between that wedge, and then it's either going to break higher or break lower. My guess is break higher. But again, in terms of nominal terms of shitty dollars, whatever's left of your dollars as they print money like it's going out of style. All right, S&P, kind of the same thing. Although the S&P, did you see the difference in these charts? We've got divergence. So, you know, we've got a downward slope here on the NASDAQ, and we got an upward slope on the S&P. So the S&P took it. Get out of the way. What the hell? What the fuck is that? The S&P took out that high from October, late October, and the NASDAQ didn't. That's the same high. So we either have, we got one of two things. We either have the sixth sister, and what's the Dow done? The Dow, so yeah. So here's that October high, and the Dow took that out as well. So we got two of the indexes took out that high. The NASDAQ failed to. To me, that's more of a sick sister issue. Like the NASDAQ is going to play catch up here and take out that high pretty soon versus the other two being wrong. Especially because the S&P is more of a broader index than NASDAQ. So, but we'll see. Sometimes when you get that divergence, that can be an indication that the maybe it was a false breakout in the S&P and a false breakout in the Dow, and the NASDAQ's going to lead the way lower. I don't think that is the case here, but I could absolutely be wrong. I could absolutely be wrong. But yeah, so we're still at 49.82. I think that's going to be about the number today for the week. Monster week, absolute monster week. I mean, we closed last week at 4,600. Okay. Like we closed last week at 4,600, 45.94. So a 400 point week in the fucking in gold is pretty and it's just every day, just gap up and then boom, 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 boom. And of course, yeah, we had Monday was the holiday, Martin Luther King. So one less trading day. That's probably why you had that big gap up. Let's see what else. Bitcoin. Go through that real quick. Fuck, is there an ant on my computer? Get out of here. Get out of there. Where'd you come from? Fucking Mexico. All right. Bitcoin. So, dude, Bitcoin is still, I tweeted out like maybe a couple weeks ago that Bitcoin, it was probably right about here back in late December, that Bitcoin looked like it was going to fall out of bed. This is a head and shoulders pattern right here. I think it's putting in the second shoulder. This is a bearish flag pattern here, which look at the respect for it. It's pretty incredible. We put in this low, and that low, and you connect them all and extend it out. I thought maybe we had taken a turn when we got above 96,000 and closed above all of these highs here. I thought maybe we were in the clear right about here. I was like, oh, maybe the pattern's going to fail. Took out those highs, but look what happens. So this is, again, so we were watching all those zones support price. Look what happens when it doesn't support price. All right. This is how you know you're wrong. If you were expecting the next move to go higher, right after this candle here, you'd want to see it go higher. Didn't get that, did we? It cut through that zone like a fucking hot knife through butter. All right. The midpoint didn't hold. All right. It almost closed in the zone completely on this candle, and then it finished the job on the next one. All right, and we can draw in our quadrants here if we want to, just for good measure. But none of those quadrants ever supported price on a daily basis, did they? Now we could zoom in. Let's go down to like a 5-minute and see if we got any support in there. I mean, look at that. Just cut through the whole fucking thing. Boom. Immediately. Found some support down there. Then found a little support at the lower quadrant, and then broke immediately below it. Couldn't get back above the midpoint there. All right, so let's go back to the daily here. So these are indications that it was going to fail. Here we go. when that zone doesn't hold and this big down close candle, like this series of down close candle, this one, if they're consecutive like that, you can consider that one big red candle. One big red candle. I'm going to make this red here. Just bear with me. All right. That didn't support price either. So you had a couple things fail, right? First of all, you had this support line hold. This trend line holds. Yeah, we barely closed above it here, immediately reversed down. Not a good sign. Then your bullish fair value gap fails. Boom, right through it. Then we call this an order block. This series of down close candles fails. Boom. All right. Now look at it. Now it's providing resistance. Look at the way there's the body of the lowest candle. Look at the resistance that we have there. It's providing resistance, and now we have a zone here that we just dipped into. Is that? I'll draw it like that. Yeah, there's no gap there. Okay. So again, I'm not cherry picking this stuff, but look at it just goes right to the midpoint of that zone and immediately reverses lower. We'll see if we can find some support in here. This is sort of the next line of defense would be this series of down close candles here. And we got these relative equal lows there. I mean, this just looks very tempting for it to rip through it. So we'll see, but this is not the reaction you wanted to see out of this bearish gap here. And it's not the reaction you want to see in this bullish gap above it. And this series of down close candles couldn't hold price either. So now we're looking for up close candles to see if they support price going lower. And look, here's our series of up close candles, and here's the market tapping the bottom of it and rejecting. So not looking great for Bitcoin. Again, you know, it might just be in a period of consolidation where it just starts chopping around. But everything else is going higher for the most part. And this just doesn't look good to me. On a daily basis, let's zoom out and look at the weekly. Again, it just looks like a head and shoulders pattern is forming. Shoulder one, the head, second shoulder. So I would put the neckline right about here. All right, there's your neckline, something like that. I mean, I don't know how they actually trade this, if you draw it straight across or not, but you get the idea. And the way the pattern completes is the distance from the neckline to the top. So from 125,000 roughly, 126,000 to 75,000. That's the amount of distance that you would go down. So that's, you know, $50,000 move lower from 90,000. Now, whether or not that completes over the coming weeks, I don't know, but chart doesn't look good for Bitcoin. And I think you guys know how I feel about the fundamentals of it, so we don't have to beat that dead horse. I do have a small exposure to crypto, nothing major. It's probably not even 5%, maybe about 5%. Probably not even that. Just in case. Just in case. Let's see, we got a little bearish flag pattern on the weekly too, if we want it. I think that we can get out of here under an hour live streaming. 3:30, we'll check in on our metals again. Silver still fucking up there, man. Did it get to 103 yet? No. Almost got to 103. I mean, that's just a monster move. What can you say? It's not a blow off top though. I really don't think it is. Even just looking at the chart, it just looks like this is the beginning of a much longer move. Look how clean it is too. Just one, this is a weekly chart. We've only had one down week since November. This is a little frustrating in here. For me, I had a couple of silver positions get called away from me in there right before. Obviously, we had a monster move higher, so that was a little frustrating. But that's part of the game. I probably shouldn't have been selling covered calls on those, but it's only money. But yeah, so I mean, any pullback, and it's hard. My old man we were talking about silver yesterday. What day is today? Today's Friday. So I think on Tuesday or Wednesday, I was going through the chart. I was telling him what was going to happen. And it literally absolutely, like the chart for silver on the daily, we were right up here. Okay. And I told him, so when you're trading all-time highs, you're going to see a lot of this. You'll see these wicks that come down and they sweep the previous day open or close or low, like this one did. This is the previous open and low. Swept it, immediately went higher. This one didn't quite get down there, but it swept that same previous day on Wednesday, January 14th, and then went higher. And we created this gap in price right here. And I was telling my old man, I'm like, now this was at the time when we were talking, this candle had not completed, and it was right down here at 92.36 or something like that. It was right down here. And I told him, I was like, yeah, this is expected. This price delivery is expected. It filled in that gap completely. All right. I would have liked to see it close above the midpoint. We didn't quite get there. It rallied at the end of the day, closed just below it. And then the next one sweeps the previous day close, doesn't get all the way down to the previous day low, rallies back up. And I was like, it's going to take out it left these relative equal highs behind. 95, I was like, it's going to rip through that. By Friday, it's going to rip through that. And actually did it yesterday. But he's like, okay, so, do you have any projections on where it's going to go? And I mean, to me, that's anyone's. Once you're at all-time highs, it's very hard because you have no reference point. How high can it go? I don't know. The only thing I can do is draw some fib extensions on some of these moves. We've already kind of taken out. If you go back to so I went back to the first leg of this move, which was right here, and I drew a fib extension from swing low to swing high and back down. So we've almost completed it. This is the first target I gave him, the 2618 extension. And look where we're at. I mean, this shit's like fucking voodoo. Look at the respect of the 1618 right here. Look at that. Boom, right off of it. So how high can it go? I don't know. We don't have a reference point now. We're at all-time highs. We've never been here before. I don't know how much higher. When it comes to stuff like silver, the projections based on the math of how much short contracts are out there and how much silver is needed and everything like that, they'll probably be more accurate. Now, some of those estimates are like $300-$400 an ounce. Seems insane. Seems fucking insane. But we're in uncharted territory as a country, as the world, I guess you would say, combined when it comes to these metals. So it might seem insane now, but it might seem pretty like how insane did $100 an ounce seem a year ago? I know we were at 30. So again, going back to that last big move in silver, a 50x move. A 50x move is not unheard of. It's happened before. So, what's a 50x move from $30, right? You're looking at thousands of 1,500 ounce dollars an ounce for silver. I mean that seems insane. And yeah, that's I would probably look to sell if it got that high. But um, in the meantime, I don't think we're going much lower anytime soon. And if we do, I think those pullbacks will be short lived. I don't see a lot of support. I don't think the banks are going to be shorting silver anymore anytime soon. They just got their asses handed to them, trying to short it on paper. So we'll see how that goes. But yeah, I guess we'll get out of here about an hour of that. Happy Friday, everybody. Got 20 minutes left in trading. That'd be really satisfying if it clips that 2618 extension today. Just so I could say the old man, target hit once again. But yeah, it looks like we're going to save $5,000 gold for Monday or maybe Sunday night when Asia opens. But man, prepare yourself accordingly. You know, I don't like to give trading advice or investing advice, but this is, like I said, I don't think this is a blow off top. And I mean, I think you guys probably, anybody that listens to this show probably knows the monetary situation that we're in, the fiscal situation we're in. Hopefully you've been planning accordingly over these years. It has not been easy over the last fucking 15 years to be in gold and silver. The last 2 years have been pretty easy because everything's been going up. But yeah, this was not a fun period here or here or here. 2020 to 2020 fucking 4, it was really gay. 2013 to 2020 was really gay. I mean, look at that. Look at all this sideways horse shit. While the fundamentals weren't changed, but look at that, dude. That was just ridiculous. So I don't know. I don't think we're going to have one of those periods for a while. I think we're going higher. But even if we pause here for a while at 5,000 and chop around for a bit, again, I just don't see a case for it going much lower. So take that for what it's worth. Probably exactly what you paid for it. Thanks for listening, everybody. Have a nice weekend. I can't play the music because I fucked this up. But maybe the next time I'll get it right. And until we should be back on Tuesday with a brand new episode of the regular show. And until then, you know what to do. Just keep on peddling that so-called fiction. Peace. Oh, morning after. Hang on. Oh. Can I do it? Can I do it? Where's my fucking peddling fiction outro? Jesus, he's got a lot of stuff here. Hold up. Where is it? Where is it? It's got all the other outros. Morning after. Why are you gay? How do you not have ours in here? What the fuck? What did I do wrong? I don't know if you guys can still hear me. Probably. It's really not in here. That is ridiculous. What a bunch of bullshit. All right. Yeah, I can't find it. I can't find it. Oh, that's frustrating. It's got everything else. I'll just end the stream. See you later, everybody. Adios.